Hope you all can see my screen. Yeah, I got a different background today. No longer the usual red background they're used to, right? Okay, so good and fine. Now this is my screen. So then when we go to Binance, this is the present exchange rate of Naira to dollar. This is 575. Like $1 is $1 is exchanging for 575 Naira. So if at this point in time you're still not earning in you're still earning in dollars, man, it's a very serious thing. Now basically this is not okay, so this is not really a presentation for ROYALQ. This is not for newbies, okay? So I'm assuming everybody here right now is a crypto analyst or a crypto enthusiast. You start using your ROYALQ. Please, if you have not started, this same time tomorrow at 8 p.m., we'll be having a presentation for beginners, a full presentation for beginners this time tomorrow. So if, for example, you're new to ROYALQ, please just be with us for tomorrow's presentation. It's going to be amazing. Today is basically to tell us about crypto manipulation and how we can utilize the ROYALQ bots. So it's going to be a 45 minutes presentation, at most 1 hour. Okay, so just know within this 1 hour, you want to learn a lot. Now, is crypto being manipulated? Of course, it is manipulated, and it can be manipulated. Like every other form of marketing, every other form of market that can be manipulated, crypto can also be manipulated. How and why can it be manipulated? Because we are all humans involved in the game of crypto. And I'm going to show you basically 4 ways. There might be more than 4, but I'm going to show you some ways in which crypto can be manipulated. Now, the first thing is called whaling. They are all interrelated. So just in case you see me repeating some explanations, these 3 basic things work together. And let me even add one so that I don't forget. I will try and explain it. Let me just add it as a note so that I'll explain it. Volume, okay. Volume trading, they are all interrelated, but okay. So first of all, what is whaling? We all know who whales are or what a whale is. A whale is a very big animal, right? Very, very big and massive animal. Now, why do we use the term whaling in crypto, and why do we call people whales? Now, whales, these are people who they hoard. I'm sure we all know the idea of hoarding, right? You buy cryptocurrencies and you hoard them, you keep on amassing them. You get the point. Now, these whales, they can crumble the market. What do I mean by crumbling? Crypto on its own cannot be crumbled because it's something that is here to stay, but it can influence the price of the market. I'm going to give you a typical example. I love my things being practical. So let's go to this website right now on our Chrome. So let's go to Bitcoin Treasuries, bitcointreasuries.org, for example. Now, when we go to bitcointreasuries.org, you can see those who are whaling Bitcoin, like whales who are holding Bitcoin. And we know one thing in crypto is crypto works with the law of what? Demand and supply. Now, what do we mean by demand and supply? The moment there is much, if the supply of any cryptocurrency outnumbers the demand, what happens? The price will definitely go down. That is why you notice when people are selling, when there's a whole lot of sell in the market, what happens? The price is what's crumbled. And when there's a whole lot of buying, meaning the demand now is outweighing the supply, what happens? The price go up. Now, these so-called guys who are whales, now let's use this as an example. This is a MicroStrategy. Now, these guys are whaling, or they are holding 114,000 Bitcoin. Like, I don't mean Bitcoin like $114,000 worth of Bitcoin. I mean 1, 2, 3, 4 Bitcoins, like 114,000 pieces of Bitcoin. Now, imagine if this MicroStrategy, for example, overnight decide to sell off all their Bitcoin, what happens? The market goes down. You get to this point, the market goes down, and all of us, we start running helter-skelter because there is now more supply is being pumped into the market. This is Tesla, Elon Musk's company, having 42,900 Bitcoin. Okay, so what happens if these guys eventually go into the market and sell off all their Bitcoins? The supply in the market will become so much, and definitely there's some coins that will work side by side with Bitcoin. So as soon as it affects Bitcoin, definitely what happens again? It affects virtually every other coin. So this is the whole idea of whaling. Remember, I told you can always check this website to see what is happening. For example, in our last presentation, we're talking about this country. What's the name of this country that just approved Bitcoin? So this is a very small country. Who can remind me the name in the chat? Let me even see if we are following up with crypto news. Yeah, El Salvador. Okay. So in our last presentation, I think El Salvador had about 200 Bitcoin. That was what we saw here in our last presentation. And during the last dip, what happened? They added more. It's now about 550. I think at present, it should be about over 900 Bitcoin that El Salvador is having. Maybe this, I don't know when last this website was updated, but I think yesterday when I checked somewhere, it was about 900 already. So these are companies, these are countries, these are individuals who are holding Bitcoin. And we call these guys whales. Now, so number one way in which the market will be manipulated is when whales, what happened, take over the market. When whales take over the market, trust me, it is crazy. So if, for example, and why do whales even manipulate the market? I would explain this when we talk about YCOF trading. I'll explain this when we talk about YCOF trading. How can these whales manipulate the market? Now, first of all, we need to know how the market is being manipulated. So when we see the price going up and down, we are no longer scared, but we can easily check out and see which game is being played on our intelligence. That's what happens. Whenever you see the market being manipulated, rather than you being scared, ask yourself, which game is the market trying to play with me? Then you'll be able to have a balanced trading psychology. So after whaling, the next thing that can influence the market is what we call FUD. Now, FUD, F-U-D, for those who are new to crypto, when you hear F-U-D, it simply means fear, uncertainty, and doubt. Fear, uncertainty, and doubt. This FUD is also related to the YCOF trading, and I'll explain this shortly. So first of all, most times you go on social media, you go on news, you see headlines, various threats to Bitcoin. Today, if it's not China that is banning Bitcoin, tomorrow it is another country that is banning Bitcoin. It is another prime minister in another country that is what's banning Bitcoin. There are a whole lot of bans here and there. If it is not A that is talking bad of cryptocurrency, it is another one. For example, let us look at this news. I'm going to highlight this and open this for us to read the news. I saw it in the group chat, in one of my group chats today. So let's just read this news and let's see. Let me open it on Chrome. So let's see what the news is saying. So ECB president issued a suspicious warning over Bitcoin, Ethereum, Cardano, BNB, SRP, and other Dogecoin after a huge price explosion. So what happens? This is also another FUD, fear, uncertainty, and doubt. So the purpose is definitely people are going to read these headlines. Many of the people who are into crypto basically are newbies. So these newbies, seeing it's of ECB president, I don't know what this ECB even means. Maybe when I read this article further, I would know what this means. But seeing this kind of article, ECB president, so issues a suspicious warning. Everybody's going to be like, what is happening? Could this be the end of cryptocurrency? Could this be the end of this? But let us not forget to understand something. Every new thing that comes about always has its own challenges because it is meant to overthrow a system. For example, when Yahoo Mail and the whole email idea came about, it came to overthrow post office and fax and all stuffs like that. You get the point? Now, this is also very important for us to know. So once this kind of thing happens, once there is a new system coming in, all those who are practitioners of the old system would definitely feel threatened and they would need to fight for their space. We all know cryptocurrency is about to overthrow the conventional banking system, the conventional economic system, which we know, which is being controlled by few individuals, the central system. Crypto is bringing the centralized form of finance. And definitely, people are bound to have problems with crypto. So with fear, uncertainty, and doubt, these are called FUD news. News like this, it is meant to scare you. And does it work? Yes, it works, because with news like this, definitely you will see a whole lot of selling, people selling off the little crypto they hold, especially those who are newbies. A perfect example of FUD was when Elon Musk came on Twitter, I think April 13th, if I'm not mistaken, to come out to say, his company, which he promised would be accepting payment by Bitcoin, is no longer accepting payment by Bitcoin. And everybody was like, Elon Musk used to be a crypto enthusiast. So what is happening that all of a sudden Elon Musk is saying his company is no longer interested in using Bitcoin as a means of payment? That is also FUD news. This is the same Elon Musk we just saw a few minutes ago, having 42,900 Bitcoins, as we saw in bitcointreasuries.org. So do we get the point now? Now, the main thing now is FUD like this is meant to scare you from holding crypto long term. And the person who posted it, he gave a very wonderful reply. Sorry, I didn't take your permission before screenshotting it, but the reply there, I don't know, it's more like a forwarded reply, so I will just go to screenshot. Now, this was the reply the person gave. He said, over the past few years, Over the past few years, this type of warnings created fear and panic, followed by dips, and therefore traders were unable to hold coins. Personally, I've come to enjoy reading these warnings as they rather generate liquidity in the market for short-term traders and create dips for buys for long-term traders. This is not a financial advice, but just my opinion from experience. And honestly, I can boldly say what this guy is saying. This is not also a financial advice, actually, but it is also my honest opinion from my own long-term experience with crypto trading. So when you see news like this, it is meant to actually scare you so that the little portfolio you are holding, you can easily give it up and people can buy. So now let us now go to the main explanation, Wyckoff trading. What is Wyckoff trading? Now, Wyckoff trading is it's used in accounting. I think the person who invented this was an accountant, but it has come to be used in crypto. And how is it? It's best explained using, let me use a diagram for you. So this is Wyckoff, and when you understand what Wyckoff is, you will definitely understand why, first of all, Ford and why the idea of whaling. So let me come to my X notes because I will need to draw. So let us now imagine, for example, so the price of a coin, let's use coin A, or let me just use BTC, for example. So the price of BTC is down here, okay? So I am an investor, I am a whale. The price is very, very low at this level. So I'm looking at this thing has potential. So I invest $2 billion, okay, let me just use $1 million or $2 billion in buying Bitcoin. So the price is low here, right? And I'm buying $2 billion worth of Bitcoin. That simply means what happens. Okay, let me use exact figures. Let's go back to bitcointreasuries.org. Let me use exact figures. So this bit, okay. So this is a MicroStrategy, right? MicroStrategy. So they are worth $5 billion worth of Bitcoin. So let's use them. $5 billion. So I am pumping, for example, $5 billion into crypto. Okay. This is the $5 billion I'm pumping into crypto. Remember, the price is very low here. But since $5 billion is entering into crypto, it simply means there is more demand of Bitcoin, because I want to buy like 100 and something thousand Bitcoin, right? So since there is more demand, what happens? The price starts going up. It starts going up because what happens? And there is now more demand and the price reaches here. Now, this is me, an early investor, seeing a potency in this coin. So as soon as the price reaches here, what happens? People like, Bitcoin is rising. They don't know that in one part of the world, somebody has pumped $5 billion into Bitcoin. That's why it's rising. So what eventually happens? More people start entering the market here because the price is rising. Everybody always wants to buy when the price is rising, right? And this will now also increase the rise in price to this level. So the price will rise further. Are we together? Now, this young man now who has bought $5 billion worth of Bitcoin, he bought it, let's say, when the price was $20,000. Now, because of what has happened in the market, there's now more demand for this coin. The price eventually increases to $50,000. Okay. So this guy has made times 2. In fact, he has doubled his money. In fact, he has even doubled and added 0.5. So the entered when it was $20,000. Now the market is at $50,000. So he has made a whole lot of profits in the market. Now, how then does he now cash out his profits? What happens? He needs to take profit. What do you mean by taking profit? He needs to start selling off. So he bought $5 billion worth here. That $5 billion worth here is already worth. So somebody is saying they can't hear me. I don't know if this is general. Can we all hear me? A yes or a no? Is this a general problem that you can't hear me? Let me know, please. Can we hear? I would need your reply in the chat. If you can all hear, let me know, please. Okay. All right. All right. Thank you very much. So, okay, so this guy here now, what happens? He needs to take profit. He bought when the price was $20,000. Now the price is $50,000. So invariably, his $5 billion is worth 10 plus of close to $15 billion. So he sells off at this point. Okay, so he now sells off at this point. Now remember, demand and supply. Him selling off at this point, meaning there's much supply in the market. So what now happens? The price starts coming down because the $5 billion he bought here that made the price rise, has decided to sell off the $5 billion worth of Bitcoin that has been multiplied already for him. He needs to take his profits. And that's normal in any business, okay? So the price starts coming down again. So he might decide to sell maybe 10% of his portfolio, 20% or 50% or 70% of his portfolio. So the price what now happens? The price drops. So now this is a whale affecting the whole market because he bought $5,000 when people were scared to buy. This whale entered the market to buy. Remember what we said? Idea of fear and greed. People were fearful. You guys were scared. This was when the whale entered. And what happened? He bought $5 billion worth of Bitcoin. Since all of you saw him buying and the market was increasing, everybody joined him and the market increased to this point. Now the organ wants to take his profit. So what happens? He sells off maybe half of his portfolio or all of his portfolio. And what happens? The market starts coming down because there is much supply in the market. So and since the market starts coming down, everybody that also bought at this point is fearful. So more people will start selling because they don't know what made the market go up. So now they don't know what is making the market come down. So everybody also sells and the market comes down. Now, as the market comes down, this organ has made his profits. So what now happens again? He entered with $5 million, for example, and now he has made like $10 billion, okay? So now he enters the market again at this level. He has already made his profit, though. The market is already down. It's crumbled already. He enters the market again at this level and now buys what? Another $10 billion because he has already doubled his money. So he wants to use double for his next transaction. I want to get into the logic. So that is why you now notice after any major dip, the market goes higher. So he's buying another $10 million. So the market pumps higher than the first place. More people see the market pumping and they're like, the market is pumping. It goes to another high level. Okay, let me just delete this particular one. Discard this. So this was, look, let's start from here. The market was like this. He took it up. He brought it down. Now, eventually, he has made more profit. So he's entering the market now with $10 billion. So definitely the market will go higher than the last point. Okay, it goes higher and everybody rushes. The market goes up, and you notice when he sells off or when they sell off, the market comes down. And once they buy back again, the market goes higher. So this is the Wyckoff explanation. This is just more of a summary or a layman's explanation of how Wyckoff happens. So this Wyckoff simply means the whales taking profits and all that. Now you will now ask yourself, remember I said everything here is related. For those who are newcomers, like I specified, actually it's going to confuse you a little bit, but tomorrow is basically for the newcomers. But I hope you guys are not confused, please. Okay, first of all, let me have a feedback. Are we all following in this explanation? Are we following together? Let me know if I'm just talking in the air. Are we following this explanation? If you're following, let me know, please. All right. Okay, thank you. All right. So this is what happens. So now we'll now ask, why? So this will now lead us to why is fraud? Why do we have fraud? And why do we have whaling? So this fraud basically is used by the big shots. These guys have control of the media. They have control of society. These are big shots. So what happens? For example, a single tweet from Elon Musk was a fraud. Just one tweet that my company will no longer use Bitcoin became fraud. It brought fear into the market. This will tell you how powerful these guys are, both on social media, both on the normal media, in fact, everywhere. So why do they do fraud? First of all, they do fraud to what? Make the price of the market come lower for them. So since the price is going lower, this is where they buy. Okay. Then as soon as the price goes high, and remember, they're going to be buying in bulk. They're going to be using huge money to buy. Okay. They're going to be using huge money to buy. And as soon as the market goes up, what happens? This is where they now sell up and take profits. Next thing, making the market come down again. So these guys have been playing with our emotions. So for those of you who rush to sell, this is where these guys are smarter. And that's why sometimes I still don't get it with crypto traders. I've noticed this. Okay. Are we together? Okay. So I've noticed this a whole lot in crypto. A whole lot. Once the price is falling, many people will be rushing to sell. I'm like, it doesn't make sense. Then eventually, once the price, and as the price is low, for example, as the price is low, people won't buy. People won't buy. Trust newbies. They'll be scared. They'll be looking. Eventually, as the price starts going high, you will now see people rushing. And as it's rushing, they'll be here. Then once the price starts going low again, you now see them selling. I'm like, it doesn't make sense for a crypto trader because what? When the price is low, this is the best time to start trading. So that as it's going higher, you're making your profits. But it still baffles me why people would be scared. They will never enter the market here at all. They will never enter the market when the market is low. It's as soon as the market is rising, you now start hearing Bitcoin on the rise, Bitcoin on the rise. So that's when you now see people entering the market here with the hope that it goes higher. So why don't you be the smart guy who would buy when it is low, so that once it's high, you make profit? Let me give you a critical example. Let me go to Binance now. Let me pick one of my favorite coins. I've loved this coin, AVAX, AVAX. So this is a coin, for example, this particular coin was at $52 in some hours back or some days back over here. As when the price was quite deep here, you get the point. When the price was quite deep here, nobody was interested in buying. People were skeptical. Now the price is at $79 to this morning, or as at now. It is now everybody's rushing into AVAX. So, so sometimes I still keep on understand, like seriously, sometimes I don't really understand the trade psychology of some crypto guys. So basically, you as a person need to understand how this market works, so that in understanding how this market works, you can be able to make an informed decision to be able to. Having known this, how then can we now utilize the ROYALQ bot to our own advantage? We now know the market can be manipulated. How then can we utilize the ROYALQ bot to our own advantage? So before we even talk about that, let's talk about volume. Now, this is a personal observation. I'm not a professional crypto trader. I'll boldly say that. But this is what I'm coming to understand in the market, and this would help you. So before we do that, let's talk about volume. Now, when you go to Binance, there is one way you can easily understand. But many of us have been seeing something in Binance. I'm surprised nobody has asked me that question. But I just observed that many of us have been seeing something that we don't really understand on Binance. And nobody even knows that it's very important. So let me go to Binance and show you this. Probably you all will learn something new today. Please, okay, I'm getting some chats. There's some chats. Someone is actually start from the basics. Just explicitly clear that this presentation is basically about what Bitcoin or crypto manipulation and how to use the ROYALQ bot to our advantage. So please, if you're a newbie, just be patient and learn. It's very important for you because I don't think you might have this opportunity again. I don't think I will go over this presentation again. However, if you still want to know more about how to use ROYALQ and crypto trading for beginners, tomorrow 8 p.m. is meant for you. We'll be doing that there. Like, that's what we are doing tomorrow. But today is basically for those who are already trading. So you also need to learn this. When you start trading, you might not have this opportunity to learn this again, okay? So now let's go to Binance, all right? Now let's pick a coin. I like using Bitcoin, for example, as my analogy. So many of us have been saying these things here, this down part, this thing here. And many of us don't know what it is, okay? Many of us don't know what it is. Now this refers to volume. What do we mean by volume? It refers to the amount of buy and sell in the market, okay? It refers to the amount of buy and sell in the market. Now, what does this mean? Now, I would let you know. So, for example, let's look at this. Now, wherever you see red, this red, for example, it means sell, the level of sell in the market. And whenever you see green, it means the level of buy in the market. So, if you notice it, let's do small mathematics here. We'll discover that it always corresponds. It's not proper that someone is giving a presentation and you ask your questions. When it's time for questions, you ask your questions. You're kind of distracting whoever is presenting. So kindly keep your questions to the end of the presentation, okay? So when we do mathematics, you discover that when there is more sell in the market, when the red here is accumulated, there's a decline in price. Look at it. Now, this red simply means there is more sell. People are selling their products in the market or their crypto in the market. And watch the corresponding movement, the price goes down. Let's now go back and see. So here now we have more greens, meaning people are buying more of this coin. And what happens? The price is going up. So this will tell you that the volume of the market, the trading, if it's green, it simply means people are buying. That's why the price is going up. And if it's red, as you can see here, it simply means people are selling off and the price is coming down. So let's look at this for a very long time. So here now you can see an accumulated green. Accumulated green. What happens? The price skyrocketed here. You can see two small candlesticks of red. what happened? There's a decline in price. So I'm sure many of you have never taken note of this, right? I'm sure many of you are hearing this for the first time. So look at this candlestick, for example. Red, meaning much sell. What happens? The price came down drastically. Now, what this simply means is the transactions in the market upward, the selling, the more people sell, the price comes down. The more people buy, the price go up. However, I've come to understand something. It's my personal thinking. Sorry, you might not want to quote me somewhere, but I've come to discover that the way the market has been going within the last 4 weeks, there about 4, 5 weeks or 6 weeks, it shows that many people who are in trading, or many people are entering crypto trading, and many people are learning the art of crypto trading, and many people have learned something. And what is it that they have learned? They have learned to take profit early. What that means was, if we go back in time and study this graph, we'll discover that before now, most people were more interested in buying a cryptocurrency and holding it. So we had more of the greens, just the buying Bitcoin for the future, and all that. So the price was skyrocketing. We were able to reach that $64,000 benchmark, the all-time high of Bitcoin. But presently, we're having more traders than holders. Many more people do not want their Bitcoin or their crypto to be idle again. So everybody is now trading. And every trader knows that once you buy at a low point, as soon as the market is rising, what happens? You start selling off to start taking your profits quite on time. So this simply means that we are having a regular nature of buy and sell. So let's look at this, for example. So we are at what? We are at, let me start from the last main dip. So we are at 37,000, right? So it rose to 46, okay? It rose to 46, 48. What happens? When it rose to 48, traders were like, oh, we've had some profit here. Let's sell off a little bit to retrace the market, meaning let's sell off a little bit to take our profits. So what happens? We notice more reds here, we notice a whole lot of reds. So traders sold. We came down to we created a new support level here for the 3,000. What happens? We're like, oh, okay, we've sold enough. Let us start buying. So more accumulation came on here. The price went high again. All right. This is just basically me doing fundamental analysis. I may not be correct, but I'm just telling you what I'm observing in the market. So we came to 50,000 resistance points. And what happens? A whole lot of sell-off came here again. So people were like, okay, let's sell off. Let's take our profits. So the price came down. And so with what is happening right now, most people are becoming, rather than holders, they're becoming traders. So it simply means the price is definitely, from what we've been saying now, it's always going to have a support level. It rises to a new level. People want to take profits, right? So they sell off, the price comes down again, it retraces itself, they buy back and all that. So we're having active traders in the market. That's why on the volume level, we're having a kind of active volume level over here of buying and selling, buying and selling, buying and selling. What that simply means is, even if the market is going bullish, it is no longer the former bullish we're expecting. And what's the normal nature of the bullish market we used to know is people are just buying to hold, people are buying to hold. Yes, people are buying to hold, more people are entering crypto, but more people are entering crypto right now as traders rather than investors. Many of us here, that's why the fact we're having a personal portfolio for investment, many of us are active traders. So since crypto now is becoming more of an active trading thing, because virtually almost every Nigerian right now wants to make profit through crypto. Everybody in every country with a bad economy wants to use crypto as an escape route. So we're no longer having active investors, people holding for long term, but we're going to be having active traders. So the bullish movements we're going to be expecting is not the regular bullish movement where we see all of, no, it's going to be a bullish movement where people buy low, people enter the market reaches a reasonable point, and they want to take profit because they also need money to run their life. So they want to sell off at a point, which will always bring to a downward movement. And it will tend to go higher again, but it's definitely going to retrace. Are we together? Are we? If you're following, please just let me know via the chat. Are we together here? Okay. All right. So beautiful. So this is the new, or this is what we'll be experiencing, pending when this would change. Okay. Pending when this will change. Now, what this simply means now is, while setting your bots, yes, create room for dips. While setting your bot, create room for dips. Now, what this simply means right now is this. Before, when people used to ask in my presentations, Alex, the way this bot is, it's created for bearish market alone, because it's only when you're buying dips you're making it. What of now that we're in the bullish market? Who says we're in the bullish market? And even if you're in the bullish market, who says the bullish market doesn't go down? That's why many of us have been getting it wrong. I myself, I think I've also gotten it wrong, because in my own strategy, I created dip for only 25%, meaning I created room for 25% dip. But I haven't realized that the way the market goes now, it goes but most of the coins are as volatile right now because of the present way of trading now. So it could even go below the 25% dip, which I've always emphasized, even in a bullish condition. It could go below that, and it could also bounce above that overnight, as we are seeing with this particular. Okay, let's go back to as we are seeing with AVAX, for example. Let me check AVAX. Let's see this in AVAX. So as you're seeing in AVAX, we can see the movement, the upward downward movement from 32 all to 64 back to 50, just very sudden. That's because, yes, people are beginning to take profits. We are having more traders than holders. So there's active movement or active inflow of crypto in the market. So let us be prepared for that. So having said this, my new, or what I'm thinking, or what I'm applying, if you notice, if I go to my ROYALQ bot right now, okay, so my ROYALQ bot, I want to be setting a trade. Actually, this is my account. This is Alex. You can see Alex said save. So this is my account. Basically, I had to clear it off. So today, all of us will be setting this account together. I'll be setting it in front of you, and basically, let's go to what I'm having. So in my spot wallet, the money I'm having available right now, the USDT is 1,500. 1,500, okay? And that's what I'm using to set my trade for this account today. And basically, I would just want to trade one single coin. That's the irony of it. With this 1,500, I just want to trade one coin. Now, that's because basically, I've come to discover it doesn't mean, the number of coins, like I say, usually I will give you arguments for and against. Now, when you're trading 1,005, many of us want to trade like 10 coins, right? And the argument is this, if coin A is doing badly somewhere, coin B will be there making profit for you. But that's also a very sound argument, actually. I've always been of that opinion. But also, I've come to discover also, when you're trading one single coin that is good, like a coin you trust, a coin that is not, that has value. For example, there's some coins you actually need to look out for. For everybody here, you can have them for long term or short term. You can want to hold them. And coins that, for example, coins like Solana, like AVAX, like Polygon, like Binance, BNB, like Ethereum. I think these are the 5 I can remember, right? And I know there are more. They're up to 8 or 9. Coins that have their own smart chains. Look out for those coins. I'm going to say them again. Coins like Polygon. Polygon has its own smart chain. Solana has its own smart chain. Avalanche, that's AVAX, has its own smart chain. What's the other one? BNB, Binance Smart Chain, Ethereum Smart Chain. Watch out for these coins, because no matter what happens, no matter what you hear about them, these coins are definitely here to stay. And most times, or more often than not, they expand. Other coins just to watch out for are coins like Uni. That's the official coin for Uniswap. So if you're making any exchange on Uniswap, definitely you need Uni. Pancakes, that's Cake. That's the official coin for Pancake Swap. Sushi, that's the official coin for Sushi Swap. Cardano, also here, Cardano is also another very good coin. So these are coins you can easily want to trade. So I'm just giving you an idea. Now, why are these coins very important? I've already given the idea. For example, on those coins that have smart chains, that have their own smart chains, before you make any transactions on those smart chains, you definitely need to have some of all these coins for gas fee. Then Aave is also a very good coin, Aave, because Aave offers a yield farming system. That's AAV is also a very good coin, because before you do anything on the Aave, yield farming, staking or whatever, you would also need a little percentage of Aave also to do your transactions. Okay, so these are the reasons why you need to watch out for these coins. So I'm just going to pick any of these coins randomly. I've always been a fan of Solana and AVAX. I'll pick AVAX, but AVAX is already doing very high. I don't know if it's going to continue. So usually buying a coin at its very, at its peak point is something I don't really, AVAX is already like at its highest point over here, 79. It reached 79 today. And when you check, it's more like in recent times, it has reached its all-time high. So I would not want to buy or trade AVAX now. Yeah, I would not want to trade AVAX. Although it made a whole lot of profit for me, actually. It made a whole lot of profit, but I just had to cancel all my accounts so that I can set this on a Zoom meeting. So let me check. I think I love Solana and Polkadot. Let me just check both of them. Let me see. Solana is also doing well in recent times. It's about to break a key resistance point. Once it breaks this key resistance point, we should be sure of seeing Solana around 195. I hope so. I hope it does break the key resistance point right now. Once it does, you should be sure of seeing Solana around 195. Otherwise, we might have a retest to 135 or something below 145 actually. So, however, I would want to trade Solana. So this is what I want to pick for my 1,500 trade. Now, I'm not telling you to do what I do, but I just want you to know the reasons why I'm doing these things. So what you're going to be doing right now is on your ROYALQ board, if you really don't enjoy the way the market is, you need to create room for so much dip. And the beautiful thing with ROYALQ is this: you cannot be liquidated. But let me just give you one quick story, a side story. So a friend of mine sent me, I don't know if I can search that picture now. It should be in my screenshots. Okay, sent me his account. He was liquidated of $600 on futures. Now that's because, like we all know, the market right now is crazy. The movements are just too volatile, So he was trading on Solana, and his liquidation price was at 142, and the price of Solana was 160. So before he slept that night, he was like, Solana no fit for overnight by $20 now. So it was Binance a message that woke him up the next morning, like, bro, your $600 over 300K has been liquidated. Okay, so that's to tell you the bad side of futures. So those who do manual trading, they are even suffering it. So if you are thinking you're having floating loss is not a natural loss. Hope you all know. When you are seeing floating loss, it only means since the market has reduced by this level, your capital has reduced by this level. Once the market bounces back, your capital bounces back, meaning you are not losing anything in ROYALQ. I hope you all know that. For those who have been telling me, Alex, floating loss, there's no trader that does not have floating loss. Now you're seeing somebody who lost $600 in liquidation on futures, okay? So that's what we all know on ROYALQ, you're trading on spots, not on futures, so you cannot be liquidated on ROYALQ. Just have that at the back of your mind. So right now, Solana is back at 149. It is relatively low. So if I would want to set Solana, I would just come here. So the first question now is, how many margin calls would I like to use for Solana? That would be the first question. If I'm entering, to determine the amount I would want to use as my first buying amount. So how many margin calls would I want to use and all that would actually be a key determinant point. Now, why am I going through this process? It's easy for me to just give you a settings. Many of you are I use 14 margin calls in the Power Team sync, right? But I want you to consider the key things I look at before I make a settings. Because at the end of this meeting, I want each and every one of us to be able to set our bots by ourselves. Look at the market condition and have a reason why you want to set your bots. Because the truth is sometimes I'm even thinking of canceling Power Team. Yeah, I want us to be professional crypto traders. Have a reason why you want to use a setting so that you can always defend your settings. Some people would tell me, Alex, we don't like this. And I'm like, yeah, you might not like my settings, but these are the reasons why I'm using these settings. And they begin to see reason with me. I'm like, oh, okay, now we get the angle you're coming from. So let us all learn the things we consider before we even go into setting our bots. So you must not follow this, but have the mindset, have the general or the basics. So I want to pick Solana. So I'm just going to type Sol, S-O-L, okay. So first of all, I'm going to go to trade settings. Yeah. So the question now is, I have $1,500. I just want to trade it for only Solana. So how many margin calls would I want to use? First of all, I need to pay attention to the fact that the market is, very crazy these days. It can go as high as plus 17, plus 20. It can go as low as minus 30. So first of all, let me now even look at the Solana of a coin. Let me see. So the highest right now is 216. That's the highest point you have gotten to 216. The present price is 149. Okay. And the lowest is 116, at least within the most recent times before this all-time high. So now I need to consider two things. From the highest position, 216 to 149, what's the difference? This is the present position. From 216 minus 149, that's about 67 was it $67 difference. That's from the all-time high, 216 to the present price is about $67 difference. Now, how many percentage difference? This is $7. That's $7 would be like 40 or 50. Let me see. 40% of 216 will be what? No, so that's relatively high. Let's check. 30% of 216. Okay, that will be like 32% of, okay, let's use 31%. So 31% difference. So between 216 and 149 is about 31% difference, meaning from the all-time high, 216 to the present price, that is 149, the price fell by what? 31%. Are we on the same page? Let me even know. Let me not just go far and they will draw me back. Are we on the same page here, please? All right. Okay. All right. Okay. Thank you. Thank you. All right. So somebody said I should go again. I'll just be fast. Let me use arrows to show you. So let me go here. Okay. So where's my? All right. So this is the all-time high, 216 that Solana has gotten to, and from 216 to the present price, 149 that we're having now, 149 here, is about 31% difference. Now, from this present price, 149, to the lowest price we've had in recent times, which is 116. Abi? Yeah, I think, okay, 116. So let's now calculate from between 149 and 116. What's the difference between that? So 149 minus 116. So it's about $33 difference. So now I'm taking note of two things. From the highest price to the present price is 31% difference. From the present price to the lowest it has gotten to within recent times is going to be how many percent? Let me see. That would be like 20% of 149. That would be about 21%. So that's going to be about 21%. So 21% difference. So now let's now look at it from here so understand it. So what I'm simply saying is from here, this is the present price, 149. So here, which is 116, the lowest it has gone to thus far in recent times, is another what? 21%. So from up here, down here, we have 31. And from this present price now, we have what? 21%. So that simply means from the all-time high, from the first price, 216, to the lowest price it has gotten to in recent times, about 50%. So meaning it is very possible for a coin. I'm just trying to prove something to you now. It is very possible for a coin to do what? To dip by what? 50%. Are we on the same page? Let me know first before I continue. Are we on the same page actually? All right, beautiful. Okay, so since we now know that, then this is, like I said, everybody has a trade psychology. A manual trader would say, okay, it doesn't mean, let me just buy. I'll use my capital to buy once. If I make profit, I know I've made profit and all that. So they're looking at, they want to make big profits. So you see them looking for 20% or 30% profit. A quantitative trader like us or like me would say, we're not after big profit, we're after small. All we are after is what? Consistency. And what is this consistency? That even if the market goes down, we want to be making profit when the market is down. And if the market goes up, we also want to make profit when the market is up. So we want a consistent form of trading. And that's what quantitative does for you. So when setting that, now I know that the deepest point the market can go to, the market can dip by 50% in any bad condition, okay? I want to be making profits when the market is bullish. I want to be making profits when the market is bearish. In this case, I have $1,500. So let me go to my calculator. And I'm going to be like, fine, I have $1,500, okay? And I want to use 14 margin. Okay, I want to enter with one. I want to enter my first position and I want to have 14 or 15 margin calls. Let me just use 15. So 1,500 divided by 15. It simply means I can use $100 for all my positions. I can open 15 positions with $100. Okay, that is very, very, very what? Impressive. Very impressive. Would I want to use $100 or would I want to use less than $100? It's not left for the individual. But left for me, let me now go and start setting my trades so that you see what I will do here. So for my first buy amount, I would put $50. Yes, I will enter the market first of all with $50. I will change here to 15 margin. Okay, 14, yeah, because all the plus from, let me now do this. This is going to be my first position. So this is my first position plus 14. This will make everything 15 positions. So this is my first position, my first buying amount. Then I want to create what? Another 14 positions. So everything will now be what? 15 positions. So what do I want my profit ratio to be? This is also something you can decide to take. I've been using 1.2 all the while. I've been using 1.2, but what I've come to discover is the way the market is moving in both directions. Yeah, it's very possible for you to use 1.2. You'll be selling at close range, you'll be scalping very well, but you can also want to take big profits. I'll be, I think right now, my trades, I'll be kind of using 1.5 or 1.8. That's because from the way the market is moving, it's, in both directions. When it's dipping, it dips very well. But when it's also increasing, it increases very well. So I just want to take 1.5. Like I said, I'm not after really big profit, but I think it's very easy for me to get something above 1.2. So it's either I take 1.5, but between 1.5 and 1.8, but not more than 1.8. So let me think. Let me see. Let me just take 1.6. So I want to take 1.6, okay? Then my profit callback. We all know what the profit callback is now. If you don't know, please attend tomorrow's Zoom meeting. I'll leave it like this, 0.05. I'll just leave it like this. Then my margin configuration. This is the most important part. Like I said, I want to be able to buy, even if this market reaches what? Minus 50. Like even if the market crumbles the more, I want to still buy. I'm not after big profit. I am after consistent profit, because my plan is after today's setting, every day, I want to have a profit to testify with. In whatever market condition, I want to have a profit. Even if it's 0 point something, I want it consistent. That's what I want now. So I'm going to take, I don't want any points that my bot will now buy above my margin calls, like all my margin calls will be exhausted. I don't want it. So I want consistent profit. So I'm going to be setting this bot with that mindset that even if the market, until the market falls above 50%, from what I've seen thus far, that's when I'll say, okay, this one passed me, it passed my power. There's nothing I can do to remedy the situation. So within these 15 margin calls, I want it to be able to wedge the market till 50%. That's what I'm setting right now. Now, why am I doing this kind of setting? Like I said, you all can have your mindset. You might decide to use something else. You might decide to wedge your markets or create your margin calls to as much as 20% to 10%, depending. But the thing is, know the basis why every setting is set. Because many people just copy parts in hook, line, and sinker. You can't even explain it to somebody. But I'm sure with this one, you can really have a mindset. Okay, this is why Alex will set power team like this. This is why Alex is changing it now, because the market can go as deep as, for example, most coins did minus 30% within the last week. I think, is it SRP? From when I bought, it was minus, when I checked my XRP at a point in time, it was minus 33% from when I entered the market. So coins are doing minus 30 plus. So this is the reason you need to understand the brain behind every setting. So my first margin call will be 1. Remember, I'm sure by now you all know my strategy now. My first 5, usually, my first 5 would be in case the market is what? The market is bullish, okay? So this will be my first 5. So I want to leave my first 5 like this. So just in case the market is playing within this level. So now let's now do the plus mass. So 1 plus 0.7 will be 1.7. Plus this will be 2.4. Plus this will be 3.1. And plus this will be 4. Plus this will be 4. So in this place now, in this whole place, my first to fifth margin call is looking at the market from 4%. Meaning, if the price falls by 1%, I want to buy another value here. If it falls again by another 0.7, I want to buy another value here. If it falls by another 1, I want to buy another value. If it falls, I want to buy another value. If it falls, I want to buy another value. This is what I've been using. Would I retain it? I don't think so. Because I know the way the market is, it is even very possible for the market to do minus 5 in a day. So I would just want to change all here to 1, 1, 1. So here will be 1. So that side will be 1.2 or 1.3. Here will be another 1.3. And here will be 1.3. So let's now do the mathematics. I'm simply telling the bot, Oga, if the market falls by 1%, I want you to buy I will specify these values here. If it falls by another 1%, I want you to buy so and so value. If it falls by another 1%, buy so and so value. If it falls by, so let's now calculate it. How many percent do we have here? 1 plus 1 will be 2, plus 1.3 will be 3.3, plus another 1.3 will be 4.6, plus another 1.3 will be 5.9. So meaning my first 5 margin calls would cover the market if the market falls by 5.9. So even in a bullish market, it is expected that the price of a coin can fall by minus 5.9. Are we on the same page here? Let me know, first of all. Are we on the same page? All right. So beautiful. So with this, now let's now see how much I want to allocate to this first 5 margin call. So remember, I'm using 50 as my first buying amount. But from this, our calculation here, remember from our calculation, we have already said that we can use $100 for our 15 positions. So, but I use 50 as my first buying amount, meaning I want to test the market with 50. So here now, remember, if I put 2, it will simply be $50 times 2. That's 50 times 2 is definitely 100. So $50 times 2, that's 100. So meaning my first margin call should now buy $100. So in other words, I've used $50 to enter the market first. I'm now saying if the price falls by 1%, what happens? Use $50 times 2, meaning use $100 to buy. So my first buying amount is $50, my first margin call would now be $100. So I will change it to 2 again. I'll change it to 2. I'll change it to 2, and I'll change it to 2. So I'm simply saying be buying $100 from this place. Now, remember, this is me using 1.5 for one single coin. And I'll be so disciplined, I'll try it. I know it's difficult because sometimes it will surprise you now. Today that I've set this market, that's when the market will be going up. I'll now be tempted. I'll leave my first and my second margin call, they sell. Why don't you just use this money to buy another coin? Since it's only your first and second margin call, the market is not dipping anymore. It is the day you now split and buy more coins. That's the day the market will dip. If you have experienced this thing, just tell me yes. Let me know if I'm the only one who has experienced this. If you know you have experienced this thing, you'll be trading one single coin. Only 2 margin calls will be selling. Only 2 margin calls will be selling. No, you now say, market is good today. Market is good today. Let me even, in fact, my margin call does not even reach my third. It's just buying and selling. Let me go and add 2 or 3 more coins. That day that you will add those coins, that's then all the market will just dip. You're about to be telling you fail to cover short position because of insufficient fund. That's it. So discipline is also what happens. So like this now, I know I'm just, in fact, whenever I'm from now on, watch my tutorials. If you see more than 1 coin in my tutorials from tomorrow, tell me, Alex, show us, have you increased your capital? If I'm increasing my capital, definitely I will add more coins. Like if I have another 1.5 now, if I want to add another 1.5, I mean, I'll be using 3,000 for 2 coins. So you who is using $150, streamline your own settings like this. You must not copy this one, but know that how much are you really allocating to this trade? Just have it from the beginning. No, that's why I say first part is have your strategy, your independent strategy that you know you can defend. So let's now continue. I have like, okay, this is supposed to be for an hour. So just dash me 10 minutes. So by 8:10, I should be done. So I've done for my 1 to 5. Then for my 6th margin call, remember, this is, let me start writing it down so let me not forget. So for my 1 to 5, it will give me 5.9. Meaning if the market dips by 5.9%, that is when my 5th margin, it will enter my 5th margin call. For my 6th margin call, I want to use something bigger because the market can go very bad. So I want to put 2. So 5.9 plus 2 will be 7.9. Simply meaning if this market falls by 7.9, I will be in my 6th position. Here, I also want to use 2. If the market falls, so this will now be 9.9. Okay, so I'm adding 2 now. It's going to be 9.9. So if market enters by 9.9, I'll be in my 7th position. So remember, we are going lower, so we need to start increasing. I'll be using 2.5. So this will simply tell you, before market will fall by 7.9, before market will fall by 9.9, the rest are sure that we're entering bullish. Sorry, bearish. Market fall by 5.9. Next thing, you enter 7.9. Next thing, you enter 9.9. The rest are sure something crazy wants to happen. So I need to start adjusting the span. So that's why here I would increase it to 2.5. 2.5. So if the market falls again by another theory, so 9.9 plus 2.5, let's start doing the calculation. I want to make sure this thing reaches 50. So 9 plus 9, 9.9 plus 2 plus 5. So right now we're at, okay, I'll just increase it to theory. 9.9 plus theory. So we have 12.9. So let me go back. So I'll increase this to theory. So we're already at 12.9, meaning my 8th margin call is already at 12% deep. If it falls by 12.9% deep, I'll be at my 8th margin call. So my 9th margin call, I want something higher. I want another 3%. So 12.9 plus 12.9 plus what? Plus theory will give me 15.9. That's me at my what? At my 9th margin call. At my 10th margin call, I want 5%. I'm simply telling the bot, if you fall by 5%, meaning that's when you will buy. So if a market has already fallen by 15.9% and it still decides to go down, then we know we are heading, and you know those kind of drastic markets we experienced on last week Sunday, before we woke up, so many people got liquidated in futures. I think I also got liquidated, but I was liquidated of $100 on futures. So this is to tell you how volatile the market is. So in my 10th margin call, I'll put 5. In my 11th margin call, I will still want to put 5. So right now we're already within 20-something percent, 0.9. If the price again goes sour by another 10%, like it drops, sorry, let me just put 8, it drops by another 8%, what happens? I still want to buy. So some people might not understand, like, Alex, why are you putting big figures? Don't worry, I'll explain why. If it falls by 10%, I want to buy. And if eventually it falls by another, I'll do the calculation. Let me see, I want to make sure it's up to, even if it's not up to 50, it should be more than 40% deep. Even if it's not up to 50, I want it to be more than 40. So it falls by another 10%, I want to buy. So let's use calculator. Let me write out the figures in a piece of paper so I will calculate it. So we have 10, 8, 5, 3, 2, 1.3, 1.3, 1. So let's do the calculation. Let's see how many percent deep we are prepared for. So I'll get my calculator. So 10 plus 10 will be 20 plus 8 plus 5 plus 5 will be 10 plus 10 plus 3 plus 3 plus 2 plus 2 plus 1.3 plus 1.3 plus 1 plus 1. So we have about 52.6. So meaning even if the price goes by 52.6, what happens? I'm not worried. I am still in the market. Remember, I'm not looking after quick profits. I'm looking for something I can just keep. Remember, the whole idea of cryptocurrency is just like your bank manager telling you right now, the 2 million you have in your bank account, we have a software that once you connect it to your bank account, it will be trading for you and be making profit for you. That's the same thing. Your bank account is your Binance. The crypto is the software that has been plugged to your crypto bank account. So it's not something I want to be checking every day, and it's not something I want to give me heart attack. So that's why you are seeing this setting here. Now, this is the ideology. In a normal market condition, for example, if the market is okay, this is a normal market condition. This is the way price would fall in a normal market condition within my first to 5. So I'll be making trades here. But if, for example, the market condition goes critical, my 6 to 9, I'll be making trades here. But anything that makes it leave this level and it starts going bull and bearish, like the price is falling anyhow, then here I have enough wedge so to balance it. So this is how I will now allocate my capital. Remember, we dropped 2 here. I want to increase it to 3. That's because this is a normal market condition. So it's very possible the price will go here. I will increase it to 3. So this might confuse people, but I will have the recording of this video. You can understand it. Why am I increasing it to 3? This is my trade strategy. Somebody might look at it and say, Alex is doing nonsense. I know what I'm doing, and I know it will help me. So look at it. So this is it. In a normal market condition, it is expected that the market moves like this. So I want to be trading more at this kind of place. So here, for example, I'm trading 150, 150, 100. If it comes here, 150, 150. So let's calculate it. 150 plus 150 will be 300, 300, and 100. So 400 between my first position, my first to 5 has consumed about $400. So this is what I'm allocating. Yeah, I left 2 here. I intentionally left 2. So I'm using 3, 3, 2, 3, 3. So for example, I've used $400 for my first to 5th position. I've used $400. Now, another place I want to pay attention to is this. I've done my first to 5th. But remember, for my 10th, someone is saying 700. It's 400 now. I don't know math again. 50 times 3. 50 times 3 is 150, right? Okay, 150, 150. That's, okay, sorry, 700, not 400. Okay, 150, 150. Yeah, that's true. 150, 150. Yeah, that's true. So this 300, 300, 700. Thanks for that correction. That's this 700. Okay, $700 has been allocated. Plus my first $50 is $750. Okay, so now I want to now take note of another thing. From my 10th margin call downwards, my 10th down, meaning the bot is going to be buying at a very low price. So what happens? I also want to accumulate more here. Since the product is going to be buying when the market is very, very, very low, I want to accumulate more here. So in this place, I would also want to do 2, possibly 2, 2. I don't want it to be at 1, 2, and here will be, okay, these ones that are going should be, let me put this at 4. So let me calculate it. I will change it. So this will be 200. So this will be 200 plus 200, 400, 500, 600, 700. Okay. So at this lower point, I'm also using 700. But 1.5 don't finish. So then for my 6th, 7, 8, 9. For my 6, 7, 8, 9, this will be 50 plus 50. That will be 100. Okay, this is like this 200. So 750 is taken from my 1st to 5th. From my 10th to the 14th, another 700 is taken. All right, so that was 1.4. So I mean, I'll just have to reduce this to 2. Let me reduce this to 2. I want the full 1.5 to go. So I think if I calculate it together, so this is going to be 150 plus 150 will be 300 plus 100 with 400. You understand? 400, this will be 500, 600, okay? So 600, these two will be 700, this will be 800, right? 800, then this will be 900. So 900 plus 2, 1,000, 1,001. So this is 1,000, 1,002, and 1,000. Yeah, 1,002 and 1,004 thereabout. So with this, we've been able to. So with this, we've been able to what? With this, we've been able to allocate the markets. With this, we've been able to allocate our 1,005. So even if the market falls by 50%, we know we are not bothered. So let me now ask you, if you have this kind of settings, would you be afraid of dips? Or would you be praying for more dips? Let me know which one. If you have this kind of setting, would you be afraid of dips or will you be praying for more dips? Let me know from a response. Would you be afraid of dips or would you be praying for more dips? Now, one thing you need to know is this. This bot helps you do what we call capital management automatically. So this bot helps you in doing what we call capital management, because if you discover you are not entering the market with 100% of your capital at any point in time, so you can now discover that you have automatically done your capital allocation. So with this, you are sure that your capital allocation is there. So with your 1.5, I can click on confirm. The another thing you might also want to work on is this distributed, this sub-in mode. So definitely, you know, all these coins, remember from my 10th margin call, you guys remember now, for my 10th margin call, I'm using bigger range. I'm like using bigger range. So I would not want to sell at this normal 1.2. I want something higher like 2.5. Yeah, I would have to do that in this kind of market. Maybe if it, yeah, we want to sell at 3, maybe 4, and this one that is going to buy, this one is buying this one at minus 10%. So I want to sell it at 5. I'm not in a hurry. Or let me just reduce it so that in case the market remains low for a very long time, you know that sometimes the market can just be low at that level. So let me just put it at, okay, let me just put all of them at 2 or 3. Let me just put it at 2. I'll put everything at 2. So even if the market remains low, in as far as it's going up small, let it still be selling. That's also the, like I said, there are two explanations to these things. Now, there are 2 ways people think. Some will say those that, remember your 10th margin call is buying at -5, -5, -5. Some people will say, since the market is buying very low at this point, let us put bigger take profits percentage. It is very good, but another thing you should also consider is, what if, you know that sometimes the market can just come low and it remains in this low point for like a week. Like it just go up small, come down, go up small, come down, you know. So you might also want to consider that. So that's why you can just be roughly put in 2% generally in all of them. And this normal ones will be at 1.8, 1.8, 1.8, 1.8, 1.8, and 1.8. So I want to trade within this. I'll click on confirm. I think I've done every other thing. I'll click on save. Our strategy mode, I'll put it as sub in real time mode. I'll click on confirm and start. I am good to go. All right, so I've entered the market. I am good to go. All right, so this is it. This is ROYALQ. We are done. So basically, I just want you to understand how the market is thinking this period, how you yourself can benefit from the volatility of the market at this period. And I hope we kind of learned something. For those one, you don't be offended that we could not go through the introductory class. So I'm booking you now for tomorrow. Okay. So tomorrow by 8 p.m., you understand? Tomorrow by 8 p.m., come and learn. Okay, come and learn. I would have given time for question, honestly. I've given time for question, but the truth is I've also scheduled another Zoom meeting for 9, and this is already 9:11. That's why you've been noticing some calls coming in. So yeah, definitely you get this recording. This Zoom is being recorded. So I've scheduled I'll be having another Zoom meeting right now, so almost immediately. So bear with me. If you have questions, I'm sure all of us got this information from our group chats now. You can always reach us through Telegram or through our group chat. So we'll call it a night here. Sorry, I didn't give room for questions, but you all know how to reach me. For those who will be watching this on YouTube, check the link in the description. You'll find my number there. You can always reach me or join any of our groups. Any of the admin will attend to you even if I'm not available to attend. So thanks a lot for coming online on this meeting.